So here is APE. This finishes at $2.74 today. That is up 12.3%. What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is AMC Entertainment. This finishes at $7.83 today. That is up 13.81%. So we analyzed this stock a few times last week. If you guys recall, I did say that AMC and APE were way oversold, way undervalued, and it was probably a good time to start buying the dip. And if you did buy the dip, you would have printed some fat tennies today. So quick recap here. In the past month, we had meme mania. The stock ran up all the way to $27. We had some meme mania pullback, and then the APE dividends got distributed, which caused a massive sell-off. We had a little bit of recovery, and then we had some bad PR last week that the company was looking to raise money by diluting APE. So then we had another sell-off. So no company-specific news to justify this price action today. Just the overall market's doing really well today. Everything moving. Value, growth, and memes. The apes are strong today. Today, this was number 3 on StockTwits after SPY and Tesla had over 3,800 mentions. So once again, we're going to analyze it. So this analysis is going to be more or less the same from when we did this stock last week, just with the updated price action. Alright, let's go ahead. Let's jump right in and analyze here. So first of all, we have a cup and handle in the making. It appears like the bottom of the cup is the low of 660, and there can be multiple possible tops. It can be $10, $11, $13, $25, or $27. And longer term, this is part of an even bigger cup and handle, or this has the potential to go all the way back up to the high of 73. Although I do believe the most realistic tops would be $10, $11, or $13. But those are all bullish indicators that is telling us that the stock should come back up to one of those tops to complete the cup. Here we had a descending channel where the upper channel was at $7 and the lower channel was around $6. So if this broke 7 to the upside, that'd be bullish. And if this broke 6 to the downside, that'd be bearish. This did in fact break $7 to the upside. So the descending channel is currently a bullish indicator that is telling us that the stock may break out to the upside. On the MACD, the moving average convergence divergence, the MACD line is above the signal line and is pulling away to the upside. So that's a bullish indicator that is telling us that it may be time to buy. The RSI, the relative strength index, is currently at 40, so not quite oversold and undervalued like it was last week, but still below average. So the RSI is currently a slightly bullish indicator that is telling us that the current price of $7.83 should be a little bit higher. And then we do have a double gap down. First gap down is back at $17.50. So that's a bullish indicator that is telling us that the stock should come back up to $17.50 to fill this gap. And the second gap down was back at $19.10. So another bullish indicator that is telling us that the stock should come back up to $19.10 to fill this gap. And now for the bearish stuff. So today, a gap up was created. It's a very small gap, very hard to see, but we have a gap up today at $6.95. So that's a bearish indicator that is telling us that the stock should come back down to $6.95 to fill that gap. And that gap should fill in the short term. In the aftermarket here, this is pulling back down to $7.70. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of $8 and $7.70. So if this goes to the upside, next levels of resistance would be $8, $8.30, $8.60, $8.90, $9.25, $9.60, $9.85, $10.40, $10.90, $11.30, $11.60, $12, $12.45, $12.65, $13.05, $13.55, $14.10, $14.65, $15, $15.35, $15.85, and then $16.50. There is resistance above $16.50, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be $7.70, $7.45, $7.10, $6.80, $6.10, $5.20, $2.95, and then $2.05. There is support below $2.05, but we're not going to discuss that right now. So right now with the current price, $7.83, the channels to the upside and the downside are pretty decently sized, so expect a regular amount of price action either way this goes. However, if/when this breaks $18.90 to the upside, the channel starts to open up and get wider, So expect a significant increase in price action if/when this breaks 1890 to the upside, and to the downside if/when this breaks 680. The channel starts to open up and get wider. So expect a significant increase in price action if/when this breaks 680 to the downside. And this did 42 million in volume today, way below the average of 72 million. So this pump today was not confirmed by the volume. Okay guys, just my opinion, not financial advice. So I hope you apes took your profits during meme mania at the top, over 25 bucks. It's been a really rough month for this stock. A lot of selling pressure, but like I said in the previous shows, now appears to be a good time to buy the dip. Again, we have a lot of bullish indicators right now in the cup and handle, double gap down, RSI, MACD, and descending channel. And again, we have bearish indicators in the gap up and aftermarket action. So way more bullish indicators than bearish indicators right now. So technically, on the chart, this looks very bullish in the short and long terms. So therefore, if you want to go long, not financial advice. You missed a really good entry below $7, but here at $7.83, this is still an above average entry, according to the RSI. You can't go too wrong here, especially if you're willing to buy and hold for the long term. Again, this should eventually come back up to 1910 to fill the gap there, and from the current price of $7.83, that would be about a 145% upside potential. So massive upside potential here in the longer term. And again, this should come back down to $6.95 to fill the gap there in the short term. So from the current price of $7.83, that would be a little bit more than a 10% downside potential. So I would say going long at the current price, $7.83 would be a low risk, very high reward play. Definitely worth a shot in my opinion. That being said, if you're a bit patient here, again, this should pull back down to $6.95 to fill the gap there. And that would be an even better entry. So from $6.95 up to $19.10, that would be about a 175% upside potential. So even more massive upside potential there in the longer term. And it really shouldn't go too much further to the downside from there. It's near the all-time low. We got some very strong support at 680. So I would say going long at 695 would also be a low risk, very high reward play. So I can support going long at the current price, 783. And if it pulls back, then you can just average down at the supports that I mentioned before. Although personally, I would try to get this back at 695. But whether you decide to go long now or hold off and wait for a better price, this should pay off pretty big in the longer term. As a wise man once said, buy the effing dip. Now, if you want to go short, not financial advice, I would not do that, and I would not recommend that for the same reasons that going long is a good idea right now. Going short is a really bad idea. Again, way more bullish indicators than bearish indicators right now. Near the yearly low. Again, this should come back up to 1910 to fill the gap there in the longer term, which would be about a 145% upside potential. And again, this should come back down to 695 to fill the gap there in the short term, which would be about a 10% downside potential. So I would say going short at the current price, 783 would be a very high risk, low reward play. Not worth it in my opinion. You should have went short anywhere in the $20 range, all the way down to $10. And here at 783, it's a bit too late to go short. And at this point, if you were to go short, there's a good chance you get burned. You'd be shorting for crumbs and exposing yourself to a massive amount of upside risk. So if you want to go short, please do that at your own risk, and it would definitely have to be for a quick scalp. Get in, get your money, get out. But quite honestly, it does not appear to be a smart play right now. I don't really see why you would do that. So I don't like the current entry of 783 on the short side, but I will say, if/when this does come back up to 1910 to fill the gap there, then I think that would be an excellent entry to start shorting this down. Probably going to be a while though before it gets there. So in summary, it's been really rough for the stock lately. It has been recovering in the past week, so you missed the absolute bottom, but this is still a really good time to buy the dip. Going long appears to be a really good play right now, although if you hold off for a little bit, you may be able to get a slightly better entry, and I really don't see a reason to go short right now. You missed your chance, and at this point, it seems like a really bad idea. So congratulations to everyone who made money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is AMC Entertainment. And let's also quickly discuss APE as well. We're not going to do a full technical analysis because there isn't too much data to go off of, but let's work with what we have here. So here is APE. This finishes at $2.74 today. That is up 12.3%. So we only have a few indicators here. So first of all, we have a cup and handle in the making. It appears like the bottom of the cup is the low of 240, and there can be multiple possible tops. It can be 360, $4, 540, 570, 610, $7, 770, or the high of 1050. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. We do have a gap down back at 630. So that's a bullish indicator. That is telling us that the stock should come back up to 630 to fill that gap. The RSI, the relative strength index, is currently at 28. So this is officially in oversold and undervalued territory. So the RSI is currently a bullish indicator that is telling us that the current price of 274 should be a lot higher. And on the MACD, the moving average convergence divergence, the MACD line is pretty far away from the signal line to the downside. So that's a bearish indicator that is telling us that it may be time to sell. And in the aftermarket here, this is pulling back down to 270. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off. So if you want to go along, not financial advice, looks like an excellent play to me. You really can't go too wrong here. Near the all-time low, more bullish indicators than bearish indicators right now. Again, eventually this should come back up to 630 to fill the gap there. And from the current price of 274, that would be about a 130% upside potential. So massive upside potential here in the longer term, and this really shouldn't go too much further to the downside. So I would say going along at the current price, 274 would be a low risk, a very high reward play. Definitely worth a shot in my opinion. So I can support going along at the current price, 274, and if it pulls back, then you can just average down at the supports that I mentioned before. But yeah, going along here should pay off really big in the longer term. And if you want to go short, not financial advice, I would not do that, and I would not recommend that. You should have went short anywhere from $10 to $4, and here at 274, it's a bit too late to go short. You missed your chance, and at this point, you're probably going to get burned. You'd be shorting for crumbs and exposing yourself to a massive amount of upside risk. Again, this should come back up to 630 to fill the gap there, which would be a 130% upside potential, and this really shouldn't go too much lower to the downside. So I would say going short at the current price, 274 would be a very high risk, low reward play. Not worth it in my opinion. Seems like a really bad idea. There's absolutely no reason to go short here, so please don't do that, guys. So in summary, just like AMC, it's been pretty rough for this stock lately, but now's the time to buy the dip. This is the all-time low, a lot of bullish indicators, and it should pay off really big in the longer term. So going long appears to be an excellent play right now, and going short appears to be a really bad idea. So congratulations to everyone who made money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is APE. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.